Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to consider the prospects of the pharmaceutical giant Eli Lilly, which has seen quite a stupendous run in its share price in this year. It has almost doubled in this span of a year, and even at these current elevated price levels, it still feels like there is some room to rise from the current levels. And in that kind of scenario, we are going to consider its recently released quarterly earnings and how the technical setup is shaping up to see if there are emerging opportunities for us to exploit in the current environment. If we look at the quarterly earnings for the third quarter of financial year 2023, we have seen substantial rise in revenues, with revenues inching close to 10 billion US dollar. And even though if you look at the net profit, there is actually loss of around $50 million, but that is simply because of the acquisition and the charge the company has put on the expenses account, and as a result of that, the rise in net revenue is not showing up as the rise in net profit. But apart from that, there has been quite a substantial rise in the sales of its recently released new solutions, new medicines, as well as there has been growth in some of the earlier products which have brought in this 37% growth in the revenue for the current quarter, with the total revenues now standing at US dollar 9.5 billion dollar, with these gross margin at 80.4%. The total operating expenses were at US dollar 7.18 billion dollar. This net income, which is actually the loss of US dollar 57 million, is because of the acquisition related charges. Here, this is the contribution which has been provided to you in this format, where you can make sense of where and how the company has been able to increase its revenues. The growth products have contributed 12.3%. The new products at 4.3. There is some decline because of other, and the antibodies for the COVID-19 have also seen decline of 5.6%. And then there is olanzapine portfolio, which has been the single biggest contributor, with 21.9% revenue growth being generated because of it. There has been also some highlights provided by the company regarding key products. Monjaro, which was launched in US last year, has been doing well with this 22% growth in the last quarter. Then there are other products like Jpexa and OMVOH, which has been also granted approval in Japan and European Union. The growth products have also contributed to the rise of revenues, and the key products have been listed here as Jardians, Tals, Trulicity, and Verzinio. So these are the key products which have provided this impetus to the total growth in revenues along with the new product launches. Now we go to the quarterly P&L statement. Afterwards, we will also look at the cash flow statement for the third quarter of this financial year. The next year guidance is in the ballpark of US $34 billion. Now, if you look at these quarterly statement, you can see there has been clear cut jump in the revenues, and is quite substantial as the revenue has climbed up to 37%, climbed up by 37%, and the total year guidance now stands above US 33 billion, which entails another quarter of solid revenues, with revenues expected to be above US 9 billion for the fourth quarter as well. Now, if we look at the cost of sales, the cost of sales were only at US $1.86 billion. Then the R&D cost is also quite significant, and for this year, for this quarter, it was actually 34 percentage point up if we compare it to the same quarter of financial year 2022. Then this charge I'm talking about, as the acquisitions were completed in the ongoing quarter, sorry, the last quarter, the company has made these provisions of US dollar 2.975 billion, which has brought down the net profit of the company. And since this is a sort of one of expenditure, and also it is going to generate revenues in the coming quarters, the market is not really looking at it any negatively. Rather than that, there has been jump after the release of its quarterly earnings, and the market participants are feeling optimistic that this money spent is going to result in the improvement of the revenues in coming quarters. And as that is going to happen, the valuations have remained elevated for the Eli Lilly, even though in this statement you can see that there was a net loss of US dollar 57.4 million. But in the next quarter, that is fourth quarter of financial year 2023, we are likely to see the net profit closer to US dollar 3 billion. So that is the expectation of the market participants. And with that kind of expectation, we are of course likely to see that the Eli Lilly's share price will remain elevated, and it is likely to continue to maintain bullish bias. And even if it doesn't really see any strong upward move from the current levels, even in that scenario, it is more likely to consolidate with bullish bias rather than going downhill wholesale from the current levels. So we now turn our focus to the technical side of the story to see what is happening. This is the longer term charting where I have used the time frame of weekly, Now, if you look at the chart closely, you will see that in last 2 years, the valuation of the Eli Lilly have tripled, and in this year in particular, the valuations have doubled. So that's a remarkable achievement for the stock, and even after the sales of COVID antibodies have stopped, the company's strong portfolio and the products it has in pipeline have kept the confidence of the investors intact, and rather it is seeing fresh momentum as newer buyers are coming in with these positive expectancy, creating further confidence in the company's ability to continue to innovate on back of its strong pipeline of products, and also the new acquisitions are going to enhance the company's intellectual property, and in the course of time contribute to new product developments and rise in revenue. Now, here, if you look at this chart, the only thing you can say is to buy, or if you feel that buying at the current juncture doesn't really look like a favorable thing to do from the risk reward ratio, then you might decide to sit on the sideline, but shorting it doesn't really look like an option, and that is what you should also do if you are a longer term investor. Because of the company's momentum being bullish, I don't really feel we should be looking at the opportunities to short. And even if you don't feel comfortable buying the Eli Lilly stock at these elevated levels, the best thing to do from the longer term perspective would be to sit on the sidelines. Now we have to look at the medium term as well, and here you can see that the consolidation has been with bullish bias. So here also we can utilize the range, and as long as the price remains above this immediate swing low of around US dollar 516, I feel we should keep looking for the opportunities to buy. And since there is support of immediate swing low, prior swing low of around 550, we should keep an eye on the share price in coming days to see if there are opportunities generated around these price levels of US 550. And if after correction there is some consolidation at least for a couple of days, and it starts to show some bullish momentum, fresh buying impetus, then in course of time we can also think about going for a new long trade from the medium term perspective in this scenario. For short term traders, the things are not that promising on the long side. Instead, you should be looking for the short selling opportunities, and that means, as I have also targeted the price level of around 550, we can expect these formation of lower lows and lower highs to continue, and eventually get the price, the share price of the Eli Lilly close to 550. Of course, that is an expectation, not certainty. So it might or might not happen. But looking at this kind of formation where the undertone has been slightly bearish, though it is part of the consolidation, but the undertone remains bearish. And in this kind of scenario, we can keep looking for the opportunities to short closer to the 600 level, and unless there is any significant price move beyond these prior swing highs, I feel we can be fairly confident of these bearishness in the short term and keep looking for the opportunities to go short in the vicinity of US dollar 600 while keeping the stop loss anywhere around 610 will do the job. So that is my take looking at these formation in different time horizons where I have also provided you variable answers. If you are a short-term trader, then the favorable thing to do is to go short. But if you are a medium-term to longer-term trader or investor, then it is better to keep waiting for the scenarios where you will have the advantage of the risk reward ratio on your side and you can take a bet feeling safe that even in the eventuality of you being on the wrong side you won't be losing too much money, but if you get it right you would be raking in the mullah. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback and I will be more than happy to take the discussion forward. Now it's time for me to sign off for the day. I will be back tomorrow with equally interesting stock to work with. So do come back. Thank you all for joining in. Goodbye.